Good afternoon and welcome to Midday Market Watch. Our guest today is Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, great to have you on the show.
Great to be here again, Brian. Thank you so much.
Now, let's take a quick look at markets and see how markets around the region are performing. Now, obviously, it's a sea of green because of the RCEP. We've got Nikkei trading at 25,858.35. It's up 1.86%. Shanghai Composite is trading at 3,342.23. It's up just under 1%. The Hang Seng is trading at 26,263.41. It's up 0.41%. ASX 200 is up 1.23%, trade at 6,484.3, and the Kospi is up 1.9% at 2,542.53. Now, the Singapore Exchange is now trading at 2,745.29 with 260 gainers and 134 decliners. Now, Jeff, interesting news today, obviously. The key news is Regional Comprehensive Economic Partnership, or RCEP, was finally signed yesterday after going through 31 rounds of negotiation over the past 8 years. Now, RCEP encompasses 15 countries with a combined population of 2.2 billion, or about 30% of the world's population, and representing about 29% of the world's gross domestic product. Now, Jeff, walk us through the impact of this on Asian markets and, more importantly, investor sentiment long-term towards global asset allocation.
Yeah, I think it's important to differentiate what it is and what it isn't. So the RCEP itself is combining a huge mishmash of regional agreements between the different parties within it into one huge document, basically cleaning it up. So it's more of an incremental rather than a big bang document. So you hit the nail on the head when you said sentiment. It's what Asia or the wider Asia Pacific can achieve going forward with regards to opening their economies and trade, rather than the details showing some incredible dropping of tariffs everywhere and becoming sort of like a European Union type arrangement. There are some important things in there, though. One is the source of origin. So basically, if you build a product in, say, Singapore, it doesn't have to have different components put into it to be able to sell it to, say, South Korea or Japan. You build it in Singapore, it's Singaporean, it can go anywhere in the RCEP now, inside those countries.
Percentage attached to that, Jeff?
Sorry?
Is there a percentage quantum attached to that to qualify?
No, and that's the great thing about it. To meet all these other previous bilateral agreements, et cetera, you could build the same product, but it has a certain amount of one thing in it, so you'd have to take that out, put something else in to sell it to another market. So that's all changed. But more importantly, I think it's got China, Japan, and South Korea for the very first time. The three big Asian developed market heavyweights are now in, for the first time, one single trade agreement. They have agreements, I guess, with each other, but they've never been together in one big agreement before with a grouping of nations. So I think that's a substantial or a significant step forward for trade in Asia for the future. And I believe it will also help Asia increase trade. The actual top line increase is not that huge. It's $200 billion by the end of 2030, which is a lot of money. I'm not disagreeing with that. But in the scale of trade, it's not, it's not spare change, but it's not an earth-shaking amount. Yeah. So, but I think really what it does set Asia up for is closer economic engagement in the future, and that will only be good for Asia. And for fund managers, I think this is going to be yet another reason why they will be pivoting a lot of their portfolios towards Asia in the coming decade.
Okay, now, key people who are left out of this or not in this agreement, the US and India. Now, there is talk that India will come on a little bit later on. Now, over the weekend, so if you look at that, and that's one key element, but over the weekend, and this is an interesting thing, Ray Dalio, the legendary founder of Bridgewater Associates, said in his video message to the Kaixing Summit that China's development is making the country more competitive in luring global capital. Now, he went on to then also say that Bridgewater Associates will be allocating far more capital to China moving forward. Now, is this a fundamental point of inflection, these two events, for China's economic relationship, not only with the region, but really globally? As the leader.
Yes and no. I don't think it's a single inflection point. I think it's another step along the road, because in order for international investment to go into China, it still has to go past the Chinese government. They have to go under these accredited investment quotas. So I think this is another step on the road where China slowly but surely opens up various markets to competition, and also starts freeing up its capital account. It doesn't have a free movement of currency in and out of the country, and that's a key sticking point for investment decisions. Nevertheless, when you look at Chinese bonds, for example, China now has a huge yield advantage over most of the developed world on interest rate yields alone. I think you get 3% for a bond or 4% for a government bond in China. You won't find that anywhere else in the world in a developed market. So there's been a lot of interest in investment grade bonds in China, but China still has a lot of work to do as far as the corporate sector goes, as far as openness, corporate governance and auditing, etc., etc. But it's definitely a significant step along the road. When you look at the economic data that's been coming out of China, but you look at data from Japan today, GDP came in higher, China's came in higher, Thailand's came in higher, Indonesia's balance of trade improved, although that's probably because imports have collapsed. But nevertheless, we're seeing signs all over Asia that Asia is achieving escape velocity economically into 2021 without the help of selling widgets to the United States and Europe. So in that basis alone, I think Asia is very quickly standing on its own feet as an economic zone, and that should be of very high interest to fund managers. And that means that this decade will be Asia's. I think we are going to see more funds allocated towards this region.
Thanks for your insights, Jeff. We've been speaking to Jeff Halley, Senior Market Analyst at Asia Pacific at OANDA. I'm Brian Fernandez on Midday Market Watch at BizTech. Check out biztech.asia for